You have $1,200, and the red date changes the whole room. This is the story of every level between borrowing space and owning it. You start with keys that never mean control. You end with doors that pay you to keep them open. You rent a small place, maybe with thin walls and a landlord who answers late. This is level 1. Your housing payment leaves and never returns. The trap is treating rent as proof you can never own. The bridge starts when shame leaves the room. At this level, every surprise bill attacks the same account. Car repair, copay, security deposit increase. It all lands on you at once. Most people stay stuck because they confuse instability with identity. The ones who move forward build breathing room before they chase ownership. Now you have 1 month of expenses saved, maybe 2. This is level 2. The panic is quieter, but it still sleeps lightly. The trap is spending the first relief like you already escaped. The bridge is patience when life finally stops shouting. You begin tracking numbers you used to avoid. Credit score, debt ratio, cash reserves, closing costs. None of it feels glamorous. Most people lose time here by staring at listings before they can survive maintenance, vacancy, and lender scrutiny. Readiness feels plain when it starts. You have a target now. Maybe 15,000, maybe 40,000, depending on your market and your strategy. This is level 3. Savings stops being abstract and starts hurting in specific ways. The trap is waiting for perfect timing. The bridge is choosing your lane and funding it relentlessly. This is where house hacking appears for some of you. Duplex, FHA loan, spare room, basement unit. For others, it is a small condo in an unfashionable zip code. Most people get trapped comparing clean stories online. Progress comes when your first deal only needs to work, not impress. You watch friends upgrade apartments while you keep rent low on purpose. You skip furniture, delay vacations, and say no more often than feels fair. This level is quiet and lonely. The trap is lifestyle creep in disguise. The bridge is protecting your buying power from your own boredom. Then you hit pre-approval. This is level 4. The number looks bigger than anything you have controlled, and suddenly ownership feels close enough to scare you. The trap is shopping with emotion first. The bridge is learning to read property as a business before it becomes your pride. You start seeing houses differently. Roof age, plumbing stack, rent potential, tax bill, insurance history, nearby jobs. Most people get trapped by granite countertops and clean staging. The ones who make it learn that ugly cash flows better than beautiful, and boring is often safer. The first closing is not cinematic. It is signatures, wire anxiety, stale office air, and a knot in your stomach. This is level 5. You own a place now. The trap is believing purchase day means you made it. The bridge is surviving the first 12 months without ego. That first month feels strange. The mortgage leaves your account, but now part of it builds equity. If you house hack, your tenant or roommate offsets the pain. Still, every creak sounds expensive. Most people panic here because ownership reveals how thin their margin really is. A water heater fails. A tenant pays late. Insurance rises. The appliance that looked fine during inspection suddenly is not fine. This level tests your nervous system. The trap is reacting to every hit like the deal is broken. The bridge is becoming calm enough to solve expensive problems quickly. You learn the new rhythm. Reserves sit untouched. Repairs get priced before emotion takes over. Screening becomes stricter. Leases become cleaner. This is the first moment ownership starts feeling real. Most people quit before this point because they wanted relief faster than the property could provide it. Now the first property stabilizes. Maybe your housing cost drops hard, or maybe the unit produces a few hundred a month after everything. This is level 6. Small cash flow feels underwhelming. The trap is disrespecting small numbers. The bridge is seeing proof instead of fantasy. That first extra $300 is easy to dismiss. It will not change your life this week, but it changes your direction. Someone else is slowly paying down debt attached to an asset you control. The ones who build portfolios understand that tiny monthly signals become large outcomes when time stays involved. Your second move matters, more than your first win. Refinance, save again, improve rents, or buy another place with stronger numbers. Most people stall because the first property made them tired. Fair enough. The bridge is deciding whether you want one good property or a repeatable system.
You enter level 7 when ownership becomes operational instead of emotional.
Spreadsheets matter. Vendor relationships matter. Tenant selection matters even more. The trap is acting rich because you own real estate. The bridge is running each unit like a small business with no room for vanity. This is where scale gets less romantic. You answer maintenance calls during dinner. You compare turnover costs.
You learn that one bad tenant can erase months of progress. Most people drift here because they never built process. The ones who rise make the property boring on purpose. You buy again, maybe a duplex, maybe a small multifamily, maybe a single-family rental in a better yield pocket. Your confidence is steadier now. The trap is over-leveraging because the first result worked. The bridge is respecting debt even while you use it. By now, your housing story has flipped. You used to ask what rent would cost you this year. Now you ask what one vacancy, one roof, or one refinance does to the portfolio. The math is larger. Your behavior gets calmer. That is how real expansion starts. Level 8 is portfolio ownership, cash flow stacks, equity compounds, tenants fund principal reduction across multiple doors. This is where outsiders think you became lucky. They did not watch the years when you lived below your means. Studied bad deals or fixed problems that ate whole weekends. Wealth through property feels quieter than people imagine. There is no constant thrill. There is a reserve account, a maintenance plan, a lender conversation, and increasing control over your time. The track is forgetting what built this. The bridge upward is stewardship, because scale punishes sloppiness fast. Eventually, the buildings stop feeling like trophies. They feel like systems. Income arrives whether you are touring apartments or sitting still on a Sunday morning. You still check numbers, you still watch debt, but the fear is gone. Housing no longer happens to you. You direct it. From up here, the whole climb looks different. Rent taught you pressure. Saving taught you restraint. Ownership taught you endurance. Landlording taught you systems. The quiet reward is control you can feel in your chest. What level are you on right now?